Hey, what's going on, business owners? So this is the first training that I'm going to do for my new series on bookkeeping and how to manage your books, as part of my initiative to help business owners to actually grow the business by using accounting as a way to do it. Now, to start off first, we're going to go to this company's profit and loss statement. So we're going to actually balance sheet first. We're going to start on the balance sheet, then go to the P&L statement. All right, so to begin, let's go to the balance sheet. So let's go to reports, and this is the balance sheet reports. And this is, we're gonna do it for, I guess we're gonna do it from the beginning of the year till right now. So right now we're seeing the company's balance sheet. Balance sheet is it contains three primary accounts, three primary I guess general accounts, which is the assets, liability accounts, and the equity accounts. So those are the three general accounts that the balance sheets contain. So within each primary account, you can have multiple assets. Like you can have checking accounts, saving accounts, accounts receivable, or from the liability, you can have accounts payable, sales tax payable, loans payable, and equity. You can have owner's draw. You can have like different equity accounts like retained earnings, net income, all those different things. To start off first, we're going to start with the primary account that you see on every single balance sheet account, and that is the checking account. Some call it operating account, some call it cash bank account, whatever you want to call it. But every balance sheet account has a checking, operating, or some type of banking account that represents the company's main way of doing business via the banking system. Now, so right here, if you check it, you can click on the checking account. You can open it up to see the activities from the beginning of the. Let me just change this account. You can see the activities from the beginning of the year till up to now, which I guess the latest details are from April 30th. And for you guys, this is actually a simple account, so don't worry about me sharing this information. This is not a real client that I have. This is just a simple account that's on QuickBooks Online. All right, so it's very, very important that you guys actually go into your bank account, the balance sheet accounts, to actually make sure that your balances are matching. So what you also need to do is actually go to your transactions, and you go to bank transactions, and you can see that you will have I don't know how you have something dated for 6/11/2024 when we're still in May, but I digress. This is, like I said, this is like a sample account, so it's kind of wonky. Okay, so these are activities that are happening on your bank account and that's being shared onto your QuickBooks Online. With QuickBooks Online, you are able to actually log into your bank account and sync the transactions that are happening in your bank account to your QuickBooks account. So by simply clicking link account, you're able to choose your bank account, and you're able to log in with your personal business bank account, have all that data pop up and populate right here. And when you're right here, what you want to do is you want to classify some of these transactions to determine what they are. Some of them are like this. For instance, this is right here is a deposit. So we have an open invoice for this particular customer, and we want to match it. So we just go back, click match. We will actually match that deposit to an open invoice that's on the account for that particular customer. And this one's a bill, but we also have a vendor account, and we have the bill already posted, and we just paid the bill. We can also click match, and it will match that bill with the payment we made to PSCNG or PG&E. Now, so you also want to make sure all this is done. I'm not going to do all the transactions, but I'm giving you a broad understanding of how to go about to go in here and make sure that you are classifying these correctly. So you need to know what these are and know where in the profit and loss they go to. So for instance, we can go to the chart of accounts. Whenever you classify those transactions, they go into your P&L, and your P&L is consistent of primarily like two accounts, which is your expense account and your income account. So it's either expense or income. So you can have other expenses, you have other income, but at the end of the day, it's still an expense account and it's still an income account. Okay, so what you also want to do too, once you classify all the transactions you have on the bank transactions, you want to reconcile your accounts. So by doing that, you can go to this transaction tab, click reconcile, and click get started. And what you need to do is you need to get your bank statement for that particular month. So when you reconcile bank statements or your bank account, you want to do it monthly. You want to choose, and you would have the beginning balance that you want. If you look at your bank statement, there's a beginning balance section and there's an ending balance section, or image, whatever. You want to make sure that the beginning balance matches what you have on your QuickBooks account, and the ending balance, you want to type it in. You want to add the end of the month that you have. And once you do that, what will happen is we're going to choose a random number just for random sakes. Let's say we ended up with $2,000 as our ending balance. What you will have is actually, did we choose a month? Let's go back. Let's reconcile from the beginning of the month. Okay, so here you go. So what you will have is you will have these transactions showing up as the balances. Because I don't have this, because this is a sample account and I don't have a statement to use as my way to reconcile. I'm not able to show you guys how to do it, but because now that I know the generate activities, I can make a prediction. So this is payments of 300 and 175. So let's say if we start off with 2,000, let me do the math. We started off with 2,000 as our beginning balance. I know we started off with 5,000 as our beginning balance. We had a payment of 3,000 minus that. We had a deposit of 175. So our ending balance should have been 475 for the end of the month. Yeah. It's like, okay, perfect. Okay, so because I have the correct ending balance, I have the correct beginning balance, all the transactions in the middle, which happened between January 1st and January 31st, adds up to make my account balance out. That means that whatever happened in my bank account is matching the transactions that are happening in my book account. This is what you want. You want to make sure that you have everything that happens in your bank statement needs to match what's happening in your book balance, on your book activities. And this is what QuickBooks is. QuickBooks is basically your own bookkeeping. The bank is its own separate entity. You want to make sure that whatever happens in the bank also happens in your book. And by clicking finish, that means that we just reconciled January, and now we can do February. So you just click in the end of February, which is we don't know the balance, so I'm just gonna guess again. It's 2,000. Yet again, you can see the activities, and we want to make sure that we add these up, and then this is how you reconcile. Very, very easy to do. That's how you go about to make sure that your bank statement matches your book balances on your QuickBooks Online account. And it's very, very important to do this at least once a month, at the end of the month, or at the beginning of the new month, to make sure that you have your balance kept up. Now, if you look at your balance sheet report, guys, I hope that was helpful. I'm going to show you more things about the cash account later on. I'm just going to go. That was a quick overview on how to go about to see your checking account, to connect it, to go about and categorizing some of your transactions, to reconcile those transactions with the bank, and to make sure that you are keeping up with these on a monthly basis. So let's look at the balance sheet report for cash or checking account for January 1st to the 31st. Okay, we can see this matches our closing balances for the end of January, and you can see that all the transactions that we had for January are in here and matches what we just reconciled. And this is how you do your reconciliation for your checking account. I will show you more about the checking account later on at a later date. For right now, I hope you guys found this helpful. Please keep following me for more tips and advice, and I'll keep showing you guys how to go about to using QuickBooks to help grow your business. Thank you guys.